This is CA Rekha. So today in this session, I'll be taking you through the topic of audit report. So what is an audit report? What are the different types of opinion? What are the specific evaluations by the auditor? Then what are the contents of an audit report? How it should be? What are the areas which requires specific attention by the auditor? So we'll be going through all these small topics in detail, and today I'll be covering SA 700. So we'll just quickly move on to the topic. So the first I'll give you a very broad overview of what is an audit report. Okay, so audit report basically I'm classifying into three buckets. Okay, first is SA 700, SA 705, and the third one is SA 706. So in SA 700, which I am dealing today, I'll be telling about what is an unmodified opinion, what is an unmodified audit report. So it is basically giving you about how to form an opinion and reporting on the financial statement. So SA 700 is basically forming an opinion and reporting on the financial statement. So here, what type of opinion that is considered is unmodified opinion. Unmodified means what? No qualification. It's a clean report. Okay, there is no kind of qualifications given by the auditor. So no queries or no queries that is given by the auditor. So it's a clean report that it represents a true and fair view of the company. Now, second, we'll be learning about SA 705. So in the next session, we'll be covering SA 705, which is a modified report. That means whenever there is some kind of modification to the audit report, we'll be making use of SA 705, and lastly SA 706. 706 means emphasis of matter and other matter paragraph. So these two, emphasis of matter and other matter paragraph, are included as a part of your audit report. So we'll go in detail what each of that will be, each of that means. Okay. So now in SA 700, we'll see what are the objectives, what are the factors that affects the conclusion, what are the specific evaluations, and finally we'll go on to the contents of the audit report. So SA 700, it's basically unmodified report. That is a clean report. No qualifications are given by the auditor. So in such a case, what is the content of that audit report? What it includes? How the auditor should report? So basically we'll go into SA 700. So SA 700, firstly the objectives. So what are the objectives of the particular audit report? Now, as I told you, SA 700, the name of the essay is forming an opinion and reporting on financial statements. So forming an opinion and reporting on financial statements. Now, so the basic objective is what? As I told you, with respect to an auditor, the main objective is to form that opinion on the particular financial statement based on the conclusions that he has arrived, based on the conclusions the auditor has arrived, and how he has to communicate that particular audit report or the findings through a written report, to the management. So basically the objective will be to form an opinion based on the conclusions, and these conclusions are like, how can the auditor arrive at conclusions? So the auditor will be arriving at conclusions based on some audit evidence. Okay. So this audit evidence, I already told you two words: sufficient and appropriateness of the audit evidence. And audit evidence, how he is obtaining the audit evidence? By performing certain audit procedures. So to perform an opinion based on the conclusions drawn on the basis of the audit evidence obtained by means of the audit procedures performed. So that is the first objective. Second is to express their opinion through a report in a written form. So how they are communicating their findings to the management. So basic objective of this essay is this much. Now we'll go to the part, what are the factors that affect the conclusion of the auditor. Now I told you the audit opinion will be based on some kind of conclusions. Now what are the different conclusions? How the auditor is coming to a conclusion? So auditor will come to a conclusion based on some audit evidence. Now we'll see what are the factors affecting the conclusion. So now conclusion will be taken into account based on three factors. One is the audit evidence obtained. I told you, I'm repeating again, it is based on the sufficiency and appropriateness, quantity and the quality of audit evidence obtained. Now second one is based on uncorrected misstatements. They say there is some kind of misstatement. Okay. Some kind of misstatements are there. Some kind of misstatement could be either due to error or maybe due to fraud. So some kind of misstatements are identified. Now the auditor has to make sure that whether these misstatements are material. I told you what is materiality. So if it affects the decision of the users of the financial statements, then it is called as a material. Now, whether these are uncorrected misstatements, some misstatements are there which is not corrected, which is not rectified. If these are material, either it could be material singly, okay, either individually also they could be material. Say one amount, amount is material enough. So what happens, the auditor will categorize that particular transaction, that is a misstatement, and the report will be qualified. So either the misstatement should be material individually or maybe together. Maybe individually it may not be material, but when you see like 10 such misstatements are there in your financials, together they will form a material amount. So we discuss this when we discuss materiality. I hope you remember that. So here again, first thing what they have to check is audit evidence that is obtained, sufficient and appropriateness. Second is your misstatements, uncorrected misstatements. If the uncorrected misstatements are there, it should be either individually or aggregate whether they are material. So that the auditor has to check before coming into any conclusion. Now, third one is the evaluations. What are evaluations? So based on the evaluations by the auditor, he will come to certain conclusions. So not only the audit evidence, not only the materiality of the uncorrected misstatements, but also some specific evaluations. So we'll see what are the specific evaluations that is taken into account or that affects the conclusion part. Now, coming to specific evaluation. So when the auditor is conducting an audit of the entity, now he will be going through or he will be verifying the applying the audit procedures, verifying the documents and records and books of accounts, and some kind of specific, he'll evaluate certain information. Okay, so what are the information, what are the analysis, what is the thing that he does to obtain some audit evidence. So certain evaluations will be obtained, evaluations will be done. So what are the evaluations? Now firstly, whenever an audit is conducted, there are few points which has to be necessarily taken care of. So the first one is the accounting policies. Okay, so whether the accounting policies are selected and they are applied consistently. So I need to make sure that whether the accounting policies are there, it is selected and applied consistently. And consistently means what? It should be in line or within tune with the applicable financial reporting framework. So I told you your applicable financial reporting framework will be varying depending on the regulator. So for companies, you have a specific format for going ahead with the report. For banks, you have another specific format. So depending on that, your accounting policies or consistency of the accounting policies with respect to will vary. So whatever as per your financial reporting framework, the accounting policy should be in line with that. That is one thing. Second is, our accounting policies are in line, but whether they are disclosed. So sometimes accounting policies might be selected and they might be used also during the preparation of financials, but I need to disclose that also. Second is disclosure of the significant accounting policies that is selected and applied. Third is what? Estimates. Estimates means what? Any kind of judgments or any kind of judgmental values that is made by the management. Say for example, bad debts, provision for bad debts. So these kind of provisions, it requires significant amount of estimation. So as at one go, a particular management or at one glance, they may not be able to come at correct estimate. Say with the verification of the previous financial statements, auditor might feel that whatever estimate that the particular management has come in agreed to might not be correct. So seeing the previous financials, auditor might feel that okay, the provision for bad debt, it is not 20%, it is more, say it is 40%, but management has estimated it as 20%. So in those areas, the accounting estimates are not reasonable. So it should be 40, double the percentage, but what happened? They are giving only 20%. So that also the auditor has to evaluate. So three things mainly. First I'll tell you. One is the accounting policies, whether accounting policies are selected and applied as per the applicable financial reporting framework. First one. Second one is whether the accounting policies which are selected, the significant accounting policies are disclosed, clearly disclosed in your financials. Third is your accounting estimates, whether they are reasonable enough, reasonableness of the accounting estimates. Now, other 2 points are with respect to the understanding how reliable the information is. Say for example, I want to make sure that the financial statements are understandable by the people or understandable by its users, or the information contained in the financial statement is relevant and accurate. So these 2 points are again considered here. So 4 points, understand very carefully: relevance, reliability, comparability and understandability of the information. So whatever the information the financials are representing, it should be relevant, up to date, concerned with a particular entity. Second, reliable, it should be accurate. The source data should be correct. I can rely on that. Comparability, it should allow for comparisons. Say I have the previous year financial statement, this year I should be able to compare both. It should not be like the previous year is in one format, this year financials is in another format. Whatever account heads are there in the previous financials are missing on the current year. So it should be comparable. Then understandable. So for each and every account heads, for each and every item in your financials, you should have the particular notes to account. So any person who is going through the financials should not be in a condition that he is not able to understand what is written there. Say for example, if it is a share capital, preference shares, it should be elaborated. What is the percentage? How if it is 12% preference shares, then what is the total number of shares? How many shares are being called for? So all the minute details. What is the authorized capital? How many is the calls to be paid? So all the minute details should be given so that it is detailed enough for the person to understand the financials without. So if a person is going, if a shareholder or a stakeholder is going through the particular financials, he should get an understanding of what is happening in the entity. So why he is given this much bonus? What is the total profit that the particular entity has earned? So how the company, what is the next step? What are the major investments made by the company? Where the company is growing, showing enough growth by comparing the previous year and the current year financials. So it should be understandable, comparable, reliable and relevant. Okay. So what are the evaluations that is made by the auditor? First is with respect to accounting policies. Second, that accounting policies, I told you, accounting policy should be applied. It should be in line with the applicable financial reporting framework. First one. Second, it is not enough that I just apply the accounting policies. It should also be disclosed properly. Disclosure of the significant accounting policies. That's the second. Third one is what? With respect to the accounting estimates. Whether the accounting estimate that is covered by the management is reasonable enough or not, or whether there is any huge variation, that also has to be evaluated. Then whether the information coming is accurate, it is reliable and it is relevant, pertaining to that particular entity, to the current period, to the current business, whatever is being happening within the entity. All the events are captured. It is relevant, comparable. I am able to compare, make comparisons or bring about the differences between the current year and the previous year financials. So both should be in the same format. It should be all the same accounting policies are applied consistently. I should be able to make out some knowledge from the comparing two financials. So, and then lastly, understandability, detailed enough with appropriate disclosures, notes to account, so that any person who is going through the financials will get an understanding of how the entity is performing or how the company is performing. Lastly, adequacy of the disclosures. Again, what is again I told you about accounting policies. Other disclosures also, it has to be adequately disclosed. Now, so till now we saw audit report. So basically three types were there. SA, one is with respect to forming an opinion and reporting. Second was with respect to your modified opinion. And third was with respect to your emphasis and other matter paragraph. SA 700, 705 and 706. Now within SA 700, here I am dealing with SA 700. We told the objectives. What are the objectives? Now what are the factors that is affecting the conclusion? And conclusion, I told you, depending on the audit evidence obtained, specific evaluations and also the materiality of the uncorrected misstatements. All the three will be taken care. And lastly, we are covering like specific evaluations by the auditor. Now, before going to the actual audit report, there is one important topic called as opinion. So I told you audit opinion will be given based on the conclusions, and these conclusions will be based on the appropriateness or insufficiency of the audit evidence obtained, which I will obtain by applying certain audit procedures. We already saw which are the different audit procedures: inquiry, inspection, verification, reconciliation. So we saw a number of audit procedures. Now, conclusion we defined. We also saw what is specific evaluations. Now the third thing is your opinion. So what is a opinion? What is an opinion? What are the different types of opinion that the auditor can give? Now coming to this, audit opinion can be of two types. Two types in the sense, one is unmodified and one is modified. Unmodified means what? Unqualified. There is no qualification. There is nothing wrong in the financials. The auditor is not giving any kind of a query or qualification that such and such thing has gone wrong with the financials. There is misstatements or there is some kind of a fraud. So there is no kind of qualification. It's a clean report, no mistakes. So your financials will be representing a true and fair view of the entity. So it is presenting fairly in all respects. The particular entity financials represents a fair view or true and fair view of the entity. So that is your unmodified opinion. Now coming to modified opinion, we have three types. So actually we will be dealing with this in SA 705 in detail. What are the three types of opinion? Now just to give a brief on that, modified opinion is of three types. One is qualified, one is adverse, and one is a disclaimer. So depending on the pervasiveness as well as the materiality of the particular misstatements, we have classified the three opinion. So just to give you an overview, qualified opinion or adverse opinion or disclaimer, whenever they are given, they are mainly given when your financial statements does not represent a true and fair view of the entity. So whenever the financial statements are not representing a true and fair view of the entity, auditor is giving some qualifications, giving some modifications to the report, then we call it as a modified report. So under modified, say there are very few qualifications, like just some misstatements are there, but these misstatements are like not too much pervasive, but it needs to be mentioned. So in such cases, I go for qualified. Now, sometimes some misstatements are there, but I am not able to. It could be, again I am telling, adverse and qualified, the two opinions, it could be depending on the number of misstatements or the pervasiveness of the misstatements. How pervasive the misstatements are or how material the misstatements are, depending on that we have qualified and adverse. Now disclaimer is when the particular auditor feels that he is not obtaining sufficient and appropriate audit evidence to tell that the financial statements are materially misstated. So in actual case there is a misstatement, but the auditor is not able to obtain some audit evidence to prove that particular stand, prove his stand. So such cases he'll be going ahead with a disclaimer of opinion where he is not obtaining sufficient and appropriate audit evidence to prove that the financial statements are materially misstated. But in qualified and adverse, the auditor has obtained audit evidence, it is sufficient and appropriate, but the financial statements are not representing a true and fair view, and there is, depending on the degree of or the number of misstatements or the quantity, or maybe I can tell depending on the pervasiveness or materiality of the misstatements involved, they are divided into two: qualified and adverse. Actually, we'll go in depth in a tabular form, like we'll see what is qualified opinion, what is adverse opinion, and what is disclaimer of opinion. Now, so here we are dealing with unmodified opinion. As I told you, what is an unmodified opinion? Now, so when will the auditor give an unmodified opinion? So auditor will be giving an unmodified opinion when he feels that the financial statement, so P&L, financial statements means your P&L, your balance sheet, your cash flow, all these financial statements are prepared and as per the applicable financial reporting. So first thing is it should be prepared as per the applicable financial reporting framework. In all material aspects, I told you it's not small, overall it should be prepared as per the applicable financial reporting framework. That is the first one. Second one is what? It should represent a true and fair view of the affairs of the entity. So it is not that though the financial statements are prepared as per your financial reporting framework, but it is not giving a true and fair view. Again, I have to go for a modified opinion only. So one of the conditions is it should be prepared as per your applicable financial reporting framework. Not only it is prepared as per that. Just because I am preparing the P&L and balance sheet as per Schedule 3 for Companies Act, now that doesn't mean I can give an unmodified opinion. Whatever the information is being given by the financials also shows a true and fair view of the entity. No material misstatement. So when will a particular financial show shows a true and fair view of the entity, affairs of the entity? When there is no material misstatements, okay? Either due to error or due to fraud. It could be anything. So no material misstatements are there. And also I am able to obtain sufficient and appropriate audit evidence. So when can I tell there is no material misstatement? Only when I obtain sufficient and appropriate audit evidence. Say for example, I don't have any audit evidence. I haven't obtained any audit evidence. Although I have applied the audit procedures which ought to be applied. I have applied everything, but I am not finding any audit evidence. In such case, can I just give an unmodified report? No. I don't know whether there is any material misstatement or not. So in such cases, I should not go. So two things should be there. There should not be any material misstatement. Also, I should be able to obtain sufficient and appropriate audit evidence. So whenever you go for unmodified opinion, remember the 3 points. 1, it should be prepared. The financials should be prepared. Balance sheet, P&L, cash flow, all the financials notes to account. It should be prepared as per your applicable financial reporting framework. Number 1. Number 2 is what? The financial statements should give a true and fair view of the affairs of the entity. Now, in order to make sure that the financial statements are giving a true and fair view of the entity, how will I conclude that? Depending on the misstatements. So, there should not be any material misstatements, either due to fraud or maybe due to error also. Second is, I am coming to that conclusion there is no material misstatement based on the audit evidence obtained, sufficiency and appropriateness of the audit evidence obtained. So all these conditions I take it, if everything is being satisfied, the financial statements are giving a clean report or giving a clean view of the affairs of the company, true and fair view, then I go ahead with a unmodified opinion. So this unmodified opinion, how I will communicate to the management people? Through a report. So whenever there is an unmodified opinion, I will be giving an unmodified report or a clean report. And this report, whatever is my findings, I will communicate to the management in a written form through a report. So this is called as an unmodified report or a clean report. So your SA 700 basically deals with unmodified opinion, unmodified report, especially forming an opinion and reporting on the financial statements. Now, as I told you, your audit report, it should be in writing, and writing in the sense it will also include your hard copy. In hard copy as well as your electronic medium. So it could be written means it could also be through your electronic medium. Both will be included in your written audit report. Now we come to the main portion or the main important portion, that is what is the format of our audit report. So till whatever we discussed, the main important topics was the different types of opinion. So we discussed what is unmodified opinion in detail. So the next session we will be discussing what is modified opinion. So that's a very important topic. What are the different types of opinion? Now when the auditor will be giving each of the particular opinions and how it will be communicated. Then we saw what are the basis for forming the conclusion and what are the specific evaluations. Now audit report also we saw. Now format of audit report. So what are the things that is included in an audit report? So I already told you audit report should be in a written format, either hard copy or an electronic copy. And why I am giving it? To communicate to the management that these are the findings or these are the things that I have understood during the audit. Now when I am giving it to the management, there should be a uniformity in the report that I give. I cannot give a report to one company in one way and to another company in a different way. So I need to have a uniformity. So for that there is a format defined. So certain components should be there in that specified format when you give a audit report. So for that we have a format of audit report. So we'll discuss what are the things that is contained in an audit report and how the audit report should look like, what are the compliance or regulatory procedures, like it should be signed, who should sign it, when it should be signed. We'll go into the technical details.